Hey, folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, March 31st, 2011, folks. Well, today is the last day of the first quarter of 2011, and again, the markets are trading basically flat on the day. Dow Jones Industrial Average up 7 points, NASDAQ up 1.5, S&P's up just under 1 point. So a very quiet day today. This is exactly what I called for yesterday to my Research Center subscribers. And by the way, you can get in on that with a free trial, a 1-week free trial of the Research Center by going to In the Money Stocks, clicking on the free trial banner. You can even take a free trial 1 week of the chat room as well. So again, keep an eye on that, folks. Notice the markets today flat, and the reason behind that essentially is that we're waiting on the jobs report. The jobs report, non-farm payrolls, unemployment report due out tomorrow morning at 8:30 a.m. And after two consecutive up days in the markets needed that pause day. You weren't going to get any selling. You're just not seeing that selling going on in the markets. The volume is way too light. 65.6 million right now in the SPY is unbelievably light. So that tells you no selling. But at the same time, chances are you're not going to have a lot of people going long ahead of the jobs report, not at least after two consecutive up days. And again, if I zoom out on the chart a little bit, this is the intraday SPY, Spiders S&P 500 ETF chart. And again, look, two consecutive days. 1, 2, and then today's more just a flattish day. Now, we could easily go up and test yesterday's highs. I would be surprised if we got through those today. I don't think we do, based on the fact that it's just a quietish day as people await those jobs numbers. All right, now, having said that, in terms of a quiet day on the SPY and the S&P, Dow, and NASDAQ, there are many other keys that are going on here that we have to follow. First off, the dollar. The dollar continues to be hit today, folks. I nailed this call left, right, and every which way on the dollar. Not only calling for the bounce right here just a month ago, which we got to the 20, but then expecting a breakdown. From that point, we broke down, we confirmed below, and then I called resistance at the retrace to a confirmed level right here. I did a lot of analysis on confirmation yesterday in the free video for you guys, and this is a perfect example. The market, again, on the dollar. This is the ETF for the dollar, US dollar index ETF, UUP. And notice how it breaks down, confirms below this blue line. Therefore, the first retrace back, you should get a pullback off of it, as it's going to be massive resistance. Not only that, but the 20 moving average is right there as well. The pullback obviously takes you down, and you're continuing to see selling. Support, obviously, at this point is now back at the double bottom level. But that's perfect. That's just such a beautiful chart to do analysis on. Look at the symmetry as well. The bounce off the level up here, the pullback below, and then the bounce, this move up is equal to this move down. See how the triangular patterns are essentially the same height on each side? This is called symmetry of the markets, and something that happens very, very often. You'll notice charts are very symmetrical in that way. All right, as the dollar weakens, we're seeing oil soar, folks. Big move on the USO today. We're nearing the double top up here now, and we are back above the 2010 highs. If I zoom out on the charts, going back to 2010 and 2009, you can see we're back above it. We have not confirmed above that level yet, though, so that's the first step to knowing it, whether or not it's a breakout. And again, after that point, then we have the 42.85 on the USO that's going to be resistant. So oil having a big day. We're seeing more issues in Libya. Again, as we continue to see the rebels in Libya get beaten back time and time again as they try to advance, it's not going too well. It looks like the U.S. may and the UN may have to do more if they're going to help the rebels actually beat off Gaddafi's forces there. So again, that's causing oil to spike up. Obviously, having him back in power there is not something the U.S. wants, nor any of the UN powers, as they basically ganged up against him. Now, that's really not something that the U.S. or anyone else wants, as he would go directly out to try and screw those countries, I'm sure, after they backed the rebels. So that's what's causing oil up today. Oil's up at 106 and change. Gold is having a big day on that destabilization as well. Take a look at the GLD up $1.58. Again, we're back above this pivot high, which is a major line. This blue line right here is a major line. We'll again watch to see if we take out this pivot high next on the GLD, but gold is having a big day. Silver is also up a little bit here. It sold off intraday. It's so interesting to see the action going on silver the last few days, because what you're seeing here is yesterday it gaps up sizably and has a major collapse and goes negative or flat. And then by the end of the day, after the seller, and this is a big seller here, there's a couple big sellers selling silver, but after they're done, it floats back up. And same thing here. Yet today, You open higher, gap up, have a big sell-off, go back to the flat line, and then again, silver is moving back to the upside. So this is continuing to tell you that there are some players and distribution going on in silver, but it's not ready to top out yet. There's no topping tail, there's no topping signal, there's no confirmation signal of a top in silver. And at this point, until you see it, you have to assume that once the sellers are done, once the institutional sellers are done, which was right here and right here, it could easily move back up very easily, and that's what we're seeing the last couple days. So keep an eye on that, folks, as it is a key trade. All right, let's go over a couple other things. One thing I do think is interesting here is taking a look at the Chevrons and the ConocoPhillips of the world. COP is something I wanted to mention to you folks. This is ConocoPhillips COP. Possible little tail up here. It did have a little bit of a topping tail earlier. Now it's kind of moved up a little bit, so it's not quite a topping tail. But depending on where this closes today, you may have a little bit of a short-term top on ConocoPhillips. In addition, Chevron. Take a look at this. Chevron, a little bit of a gap up and big reversal, almost back to the flat line. So you're seeing some signs that some of these oil stocks that have had huge gains are maybe stalling out. And again, that's something that we have to monitor very closely because they've had huge runs. I mean, if you take a look at the Chevron chart, it goes from about 67 bucks all the way to 109, almost 110 today. I believe that's a 63% gain in the last 9 months or so, from really July of last year to the end of March this year. So 63% on a stock that size is very unbelievable. And it is due for a pullback, but you haven't seen any signs until today. We're starting to see little cracks in the ice, in the glass, if you will, on some of these oil stocks. My guess is if oil goes higher, people are thinking demand will start to really decline for oil, and therefore that'll hurt. Yes, they're making more per barrel, these oil companies, but at the same time, if you raise oil and gasoline now goes to $4 to $5 a gallon, people are going to drive less. That means less demand, so that is actually going to hurt their profits on that side of the curve. You have the good side, which is the profit based on higher oil, but the bad side on the demand curve, which is going to get hit. So that's what seems to be going on there. Financials are a little on the weaker side today. JP Morgan, Bank of America, Wells Fargo are slightly lower, even with the market flattish. Amazon continues its assault on the upside here. What I'm thinking on Amazon, though, folks, is you have a big gap window right here, which is probably where you're headed, and then you have a big gap right here to fill. These are probably your levels. Ultimately, I've got to believe you're going to get up there. Right now, you're stalling out at this little pivot area right here. You're actually slightly above it right now. We'll see where this goes by the end of the day. Either way, those are your levels on Amazon on the upside that I'm thinking it does have a chance to go to. Ford Motor Company, I mentioned this on the Rant and Rave blog. You do want to follow that intraday as we post a lot of possible plays. Please note the in spirit of bull flag pattern here. This is telling us that it could make a move to the upside. To the 50 moving average would be your target. And again, it's a beautiful in spirit of bull flag pattern. As long as it stays above these two moving averages, it's in play. If it takes those out, then it's probably going to go lower. All right, so nice little bull flag there on the chart of Ford Motor Company, symbol F. All right, and let me just erase this underlying line here. There we go. Let's see if there's anything else. Apple Computer, again, remains kind of on a neutral course here. One of the weaker stocks over the last few days when the market's been rallying. Market's flat to positive today, and Apple's basically flat on the day. Research in Motion pulling back. I called this one out perfectly to those of you that watched the free video and the nightly video. We talked about the first hit of the 200. You might get a day or two bounce. That's exactly what you got. And then I said look for it to go lower because the head and shoulder pattern here would probably play out to the downside. And that's exactly what's happening. And again, you can see a little bit of a bounce at the 200, but now it's starting to go lower, down 90 cents today. Head and shoulder target, I believe, takes you down to about 48, 49 bucks, somewhere in that range to the downside. Ultimately, target on Research in Motion. All right, I think that's about it for today, folks. Fun day overall, although it is quiet, but key stocks are making moves. We will continue to kind of give you guys the whole keys to this market. I do encourage you to join the Research Center and the Intraday Stock Chat. Because there's free trials, there's no harm in trying it out. That's my policy. Give it to you guys, let you guys try it out, see the value in it, make the money, and then stick with us for life as most of our members do. Take care, guys. Have a great day.